Right now, we're still very bullish on Des Moines, so we're still looking in that market. But now we're also expanding. We're looking in Omaha, Nebraska, Sioux Falls, South Dakota, Madison, Wisconsin, Kansas City, Missouri. Some of those Midwestern cities. When we initially did our market research, try to figure out where we wanted to break into, I was manually like scraping some census data, trying to see if I could, come up with some of the same stuff that, these big, Marcus and Millichap and CBRE reports were coming up with, and also seeing like if I could find out anything different that they weren't, putting out there. Right. And so the thing is, like, we saw a lot of the same things that they're seeing. Austin, Texas is blowing up. Salt Lake City is blowing up. Boise, Idaho is blowing up. And the thing is with that, like, I was spending all this time, to prove, the obvious. Like, yes, these tier one cities are good, strong investment cities, right? But the thing is, when you go in there, and especially like at our size, things are trading at a 4 cap, 3.5 cap, and there's just not that much meat on the bone. And, when it's just my business partner and I placing offers and doing these very like labor intensive, if you will, capital raises, it's not as appealing to sellers. Granted, like I milk the military card, the young hustler, and it's gotten us this far. But if we're trying to put ourselves on an A-class asset, that'll be cute to a seller, but they're not necessarily going to go with us over institutional money who's a guaranteed close, right? So then we started realizing, like, well, maybe we should look at some of these tier two markets where you're still seeing incredibly strong growth. It's stable growth. It's just not on an exponential rate that you see in, the Austin, Texas, the Dallas, Texas, Salt Lake City, Utah, those types of places. And that's what brought us to Des Moines. I was also familiar with it just from going to college, but then Des Moines, Sioux Falls, like a couple of markets that have been showing like incredibly strong, stable growth were actually much better performing during the '08 crash, during the pandemic, based on, their demographics and the, job diversity and the job markets that are there. And so we went in and, being able to say, one, I have ties to, Iowa, that helped a lot as well. And there's a lot easier barrier to entry. The properties that we put in on, there's going to be multiple offer, competition, but you're talking, 5 to 10, not 20 or 30, right? So it's a little bit easier for us to stand out as those young hustlers when I actually have an opportunity to maybe meet the seller or, have specific ties to the area.